Florian Graillot is co-founder and partner at Astoria VC, the early-stage investment fund focused on InsurTech. With his extensive experience as InsurTech investor and frequent speaker and writer about all things InsurTech, we're excited to hear from Florian about the opportunities in the second wave of insurance innovation. What's the current climate for startups and how can they best position themselves for success? And what should incumbents take into account? Let's get ready for the second wave of insurance innovation, and please welcome Florian Graillot.
Hi everyone, thanks a lot for staying in the room for that quick overview. Maybe a few words about myself and where I'm speaking from, ahead of discussing what might happen next in insurance innovation. Long story short, I've been investing in tech startups for 15 years. You can find me and my newsletter on LinkedIn. And for 5 years, I've been running and co-founding Astoria VC. We are an investor investing in tech for insurance and emerging risks at seed stage, so basically when the product exists, and we are investing across Europe. So everything which I will share with you later on is really Europe-oriented. Before jumping on what might happen next, I just wanted to share a views and lessons learned on this first wave of innovation, what we call InsurTech 1.0. Here are several startups. They have several things in common. The first one is that they are all based in Europe. Extended definition of Europe, including the UK, Switzerland, the Nordics. That's the way we see the European market in an InsurTech perspective. So they are all based in Europe. They have all raised more than 15 million euros last year. And they are all named InsurTech players. Though, and probably you're familiar with several of them, if not all of them, you might have spotted that they have different positioning. Different positioning in terms of value chain. If you take Tractable, for instance, they are rather on the claim part of the value chain, while Accurate, for instance, is rather on the pricing part of the value chain. Same with Business Line. If you take Superscript or Thinksurance, they are rather on commercial lines, while Lassie or Hedvig are on P&C business line. Same with distribution. Hedvig is a full-stack player doing direct distribution, while Cover is doing embedded insurance, distributing insurance through partners. So what I want to illustrate with that short list of InsurTech players is that we have all a single word, InsurTech, to name actually different realities. So whenever you will say InsurTech doesn't work, or InsurTech sucks, that's something that we hear a lot among corporates. Please remind what I just said. You should be slightly more granular. Beyond the joke, I wanted to highlight several business models again and several positioning on the market. And I guess this is how we can split the InsurTech market. Again, if InsurTech is something that we can label in the same way, I would split it in two different ways. On the left side of the slide, you can see B2B players. So basically, tech solution for insurance player. On the left side of the slide, you have players that are selling insurance products, what we call D2C, direct to consumer, whether the consumer is ourselves, end user, or SMEs, freelancer, enterprises. But they are all selling insurance products. But again, beyond this second category, D2C players, you have several positioning and several business models. Full stack players, you may be familiar with Lemonade in the US, I would say WeFox in Europe. There are brokers, so they are just intermediaries, seller of insurance solution. And I would say, and to simplify, in between, you have MGAs. So once again, one word, InsurTech, several positioning. Again, if I come back to the first wave of InsurTech, basically the startup that were created over the last 10 years, it happened that 2/3 of them are tackling the distribution part of the value chain. So once again, when you consider that whatever startup doing distribution failed, is not successful, is not shiny, or whatever the word you would use to pretend that InsurTech doesn't work, please remind that first, a third of InsurTech players are not around distribution. And beyond these two-thirds of startups doing distribution, once again, discover a wide reality. You have basically three major waves of innovation around distribution. The first wave, I guess that you are familiar with this one because that's the most shiny players, probably the players that raised most money over the last years. They made the headline. Let's rediscuss their success later on. But for the first wave was around direct distribution, so basically offering insurance solution online, usually through a website, sometimes through a mobile app as well. Then you had tech for brokers and agents, so that's rather B2B, SaaS solution for existing distribution channels. And more recently, you had embedded insurance, which is basically a technology enabling new distribution channels, e-commerce website, platforms that could add insurance somewhere in their customer journey. So once again, speaking of distribution, these are two-thirds of all the startups in Europe. Nevertheless, we need to have a bit more of granularity because there are several trends behind this insurance distribution trend. And that's the big picture I wanted to share. Again, I guess that you are quite familiar with all the headlines on X or Y raised X million euros. These guys or this girl raised crazy amounts. I wanted to come back to, let's say, business KPI. Once again, I put on top of the waterline big names that you may be familiar with. Again, WeFox from Germany, Lemonade from the US, Luco from France. And whatever you think about themselves, let's take Lemonade, for instance. Again, usually people are very, let's say, pessimistic or very tough about their public journey on the US market. Nevertheless, Cardiff, a famous French or from France bank insurance player, partner with them. Same with Luco, doing home insurance in France. They almost got bankrupt. Nevertheless, Allianz acquired them. So whatever you think about this player, it seems that there is a bit of value behind this player. And what I wanted to highlight in that slide is actually what's happening below the waterline, which are several players with different positioning actually, which are sharing public KPIs, so that's why they are here on that slide. You can easily find them on Google. The first one is Descartes Underwriting. You may be familiar with the parametric insurance opportunity. It happened that this startup, less than 6 years old, is already doing 150 million of GWP. So again, I leave you compare that with your own business line. GetSafe, doing P&C direct distribution from Germany, is over 550K customer already. Same with Hellas Direct in Greece, doing mainly car insurance, a bit of home insurance as well. They have more than 900K customers. And last but not least, in France, Achille, they have more than 500K P&C customer doing distribution mainly online. Again, I leave you compare these figures. For this startup, you should keep in mind that they are 5, 6 years old. So whenever you could be challenging with startup that you've met recently and let's say dubious about the fundraising amount that they are announcing, keep in mind that several of these players have reached what I believe are nice milestones. Again, that's very personal, so you might disagree with me. Happy to follow up on that discussion. So now that we have a bit of granularity on the market, again, one word, several realities in terms of positioning. Okay, several players are struggling in terms of fundraising. Some are going bankrupt, but several of them have reached very nice milestone already. If we have a look at the InsurTech startup scene in Europe more specifically, and I will go through this one very quickly, it's rather to give you a snapshot on where the market is. On the left part of the screen, you can see the investment in Europe. Yes, they have peaked in 2021, But what I wanted to highlight is that there is nothing specific to insurance innovation. It's not only InsurTech that is struggling, unfortunately, I would say. If you have a look at the fintech investments worldwide, you can see exactly the same curve with a peak in 2021, 2022, and now down worldwide. Same if you move even upper into the market and have a look at all the VC investment in startups, same curve with a peak in 2021, 2022. Second point, which I believe is really key, is that innovation is happening everywhere. So wherever you're from, in terms of geography, there might be insurance innovation somewhere in your local market. That not, again, all these charts are the number of rounds announced in InsurTech Europe since the beginning of this year. As you can see in terms of geography, no surprise, the UK, France, and Germany are the biggest ecosystem. But you can see that, and sorry for that label, but rest of Europe, so beyond these three ecosystems, they are active as well. More than a fourth of all rounds are happening there. Same with the business line. Sometimes you may be tempted to say that InsurTech is all about P&C, in blue, on the middle chart. Actually, you can see that P&C is slightly more than a fourth of all rounds announced. And last but not least, the value chain. Usually, all the value chain is tackled. I believe this is the first time in 10 years of tracking these figures that claim is empty. Usually, claim is 10% of all the rounds. But if you take, again, 10 years of innovation, all this section of the simplified value chain are covered. And last but not least, InsurTech, if you compare that to FinTech, is just 10% in terms of investment. So we are still in early days, I believe, of insurance innovation, because if you have a look at that chart, worldwide investment in green, in FinTech, in blue, in InsurTech, you can see that there are 4 or 5 years of delay between those markets. So what can we expect next? I would start with a first standpoint on the data, because that's something that surprised me when I started working in the insurance industry. Insurance companies usually say that insurance is all about data, but if you take a step back and think about which data your home insurance provider, car insurance provider owns about you, you will realize that not only the data are declarative, but they are also very limited. Very far from what every platform could have on you or tech giant could have on you, which could be very personal data. And here I took 2 headlines, actually, illustrating 2 different moods around data in insurance. On the left part of the screen, that's the CEO of the French, I would say, French team and representative of insurance carrier. She's afraid of the FIDA regulation, so basically the Open Insurance Initiative. And at the same time, almost the same day, actually, a few days later, you had exactly the same kind of player, but this time at the European level, so European Union of Insurers, that asked the regulator to open the data that are generated by vehicles. So it means on one side, please, insurance company, open your data. We don't want, we believe that it will destroy the industry. At the same time, we, same player, insurance carrier, we ask other player to open their data. So it seems to be not to be consistent. Second point and second trend I believe will drive insurance innovation is everything around operational efficiency, not to say reducing costs. Here, that's a list of French health insurance company, and they had a benchmark on how much they were spending out of the GWP, out of the policies, in terms of operations. And what I found very interesting is that the benchmark is quite wide and broad, because you had players that are spending only 10% of the premium in costs, while several other players are spending 28%. So if you are the one with 10% cost, probably your policies might be cheaper. So that's something to keep in mind. And usually when you are a startup innovating in that space, you should, or I would expect as an investor, that you as an InsurTech are in the best part of that benchmark. But on the other hand, those that are spending 28% of the policies in operations they would need technology to lower these costs and to be more effective. So again, if there are any entrepreneurs in the room, keep that in mind. There is a lot of room to improve things on the market. And there is no mistake. Several players, if you add the two columns, the cost of claim and the cost of operations, several players are over 100%. It's not a mistake. They are just not profitable. Now let's move to home insurance. I don't know how many of you are operating in that space, but that's usually one of the big business line among incumbents. And you may have seen that in the US, for instance, several states, several insurance providers have left the market. If I take the French market, from which I am, as you may have here, it happened that we had flood in the north, drought in the south. So basically, every 6 months, several insurance carriers are leaving part of the French market, which I believe is not sustainable because not only on a societal mindset, it doesn't fly, but that's another discussion. If you take just a business perspective, it means that if you are leaving all the market because there are climate damages, then at the end of the day, you don't have any revenues. So the challenge is not to leave all the market. On the other hand, you cannot pretend that you will increase the prices to the sky. The reality is obviously in between. That's where technology, data could be helpful. So again, I believe this is a huge opportunity for startups to collaborate with incumbents. I would say it's exactly the same in the switch to electric vehicle. Electric vehicles are today 25% of all the new vehicles sold in Europe. So you can consider that 25% is a niche. Nevertheless, that's a fourth of the market. So get ready for that. And by the way, this vehicle didn't exist a while ago. So most of the underwriting algorithms today are not built around this kind of vehicles, where the risk of the car itself is slightly different from old cars, because there are risks around the batteries, fires, etc., and even on the software itself. So you need to think a bit different, and probably that's an opportunity, once again, for new startups to address the market. Another example is on cybersecurity. This is a quote from one of the C-level at Swiss Re. He said that basically cybersecurity, cyber insurance will be a huge business line in the future, nevertheless. And so far, they remain very cautious because they don't have enough data. So back to the data discussion, they don't have enough data to understand and price that risk. And that's a pattern that we see across what we call emerging risks. So there are plenty of them: digital asset, electric vehicle, climate change, new way of working, AI, obviously, as well. And for all of them, there is a challenge, which is first, spot and access new data sets, develop algorithms to get sense of these data sets, and ultimately you will be able to carry the risk. So that's where probably for the two first bullet points here, I believe that there is a huge opportunity for tech startups, insurtech, risk tech, long story short, entrepreneurs to build things and work together with the insurance carrier, because at the end of the day, carrying the risk is their job, whether they are an insurance company or a reinsurance company. So that's a massive opportunity we see right now, and we expect more and more startups to be built in that direction. And one more thing, because I believe that you would not have been happy if I had not covered the AI topic, so I would conclude with that. And I wanted to be quite balanced once again with AI. On the left part of the screen, that's basically a ranking. You may be familiar with that infographic. That's from Accenture. They ranked industries depending on how much they expect these industries to be impacted by AI technologies, whether impacted in a good or a bad way. And it happens that insurance, you cannot read it on the screen, so believe me, insurance is number 2 in that ranking, beyond banking. And whatever infographic you have a look at, usually insurance is in the top 3. So you might say, okay, there is a lot to build in that space. That's what I believe. On the other hand, we had a look at the market recently, and AI first insurtech player, there are already 70 players across Europe with AI at the core of their business value proposition. And they are doing fraud detection, car claim, customer relationship, and more recently, new and emerging risk. So basically, if you, as an insurance company, are not yet working with an AI company, AI-first insurtech company, you are probably lagging behind. And if you are an entrepreneur, please keep building insurance technology and innovation. Thanks a lot.